Forex trading is hard, but sometimes we get easy, simple textbook opportunity to milk money out of the market, just like I did 350 pips in my second trade of the last monthly contract. In this video, I'll walk you through how it all happened step by step. The trade was on the monthly May move to the monthly target. At the beginning of every monthly contract, I make direction analysis video based on what the institutional big players are doing and based on the forex time and price cycle. And I share this video with the members of our institutional data channel at the beginning of every monthly contract. Here is a clip from the video showing our monthly swing expectation. The monthly target for the new monthly contract that is being opened, and that is this level right here, which is the low of the previous monthly contract. Then by Wednesday we should get a false move to the upside to create a premium price where the institutions can load their sell for the monthly contracts, and from that point we will start seeing price head back down, so we can get the rejection from there, after which the control block will fail and price will head for the monthly target. This is what I'm expecting. I don't know how fast the delivery will be. It can take time and it can be fast, but we will see, and that is why we still need to focus on price action to know how we can take advantage of the expected moves. As you have seen from the video, our monthly target was the low of the previous monthly contract. So let's go ahead and mark that. I'm actually on a replay tool, so we are back in time right now. The date is Wednesday, the 23rd of July 2025. So I've already marked out the monthly contract. This is the beginning of the new monthly contract at that point. But the previous monthly contract, this is the low right here. So I'm going to mark that low because that is our target. And from the video that I showed earlier, you can see that that level is exactly where we expected the market to go to. And in the video, we expected this false buy move to the upside to come to this region, and right now the price is at that point. So we have a high price for us to take the sell. So our sell target is this one right here, and we are expecting price action to give us a confirmation for a sell. But before we even go to price action, we need to know what the institutional players are doing right now. What we expect them to do is based on the accumulation from the contract open. Now we want to see what they are doing at the moment with their active orders. So we need to check the order count from the previous weekly and intra-week contracts. So I'll have to mark up the orders that we got from the institutions around this region so that we can do the order count and know what the institutions are positioning for around this point. We are expecting a sell, so we will expect them to also position for sell before we can decide to go and look at price action for entry. If we are looking for a sell and the institutions are buying around this point, that means we should wait until the institution starts accumulating sell before we will start looking at price action for entry. So what I'll do right now is to go ahead and mark up the orders that came in around this point. So to do that, I first need to mark up the contracts. So we have Wednesday right here, Wednesday open. That's the beginning of a new weekly contract. I'll make that blue. The open of this weekly contract that ended here will be the last Wednesday open, which is this one. So right here we have a complete weekly contract, and the intra-week contract will be on Monday right here. So I'll make that a green line just to show the difference. So we know that the red line is the monthly contract, the blue line is the weekly contract, and the green line is the intra-week contract. So let's go ahead and mark the orders that came into the market within this period. So these are the orders that came into the market at that point. All these orders were shared in our data channel on Telegram. If you'd like to join the channel, the link to join will be in the description of this video. So on Tuesday, we got a sell right here, as you can see, and on Wednesday we got 2 buys, and on Thursday we got another sell with a pending order right here. If you have watched our video on order count, then it should be easy for you to do the order count with us. So we would have to do the order count for this Wednesday to Friday contract, then we'll do for Monday, Tuesday, and add the 2 up for the weekly order count. So for the Wednesday to Friday contract, we have 2 orders that are active and these 2 pending orders right here. This pending order right here was activated by this push to the downside. As you can see that the wick crossed that level, which means this order has now been activated. So it will count as 2 plus 1. That will give us 3 buys. It means for this contract we have 3 buy orders. Now to the sell side. This week right here picked this pending sell order that was here on Tuesday. So that means that order has been activated by this price action. So it will count as 2 active sell plus this one right here, that is 3. That means we also have 3 sells. That will give us equal count for the buy and the sell. That means the institutional players are neutral within this contract. So we move on to the next intra-week contract. As you can see, for Monday and Tuesday there was no order opened, but this pending sell right here was activated by the price action on Tuesday, which means this order will be counted as 2 in this intra-week contract. That means our order count will be 0 buys and 2 sells. So for the 2 intra-week contracts that make up the weekly contract, we have 3 buys 3 sell here and 0 buy 2 sell here. For us to know what the institutional positioning is for the weekly contract, we have to add the 2 together. That will give us 5 sells and 3 buy. That means the institutional traders within this weekly contract are positioned for sell. Remember, at this high is exactly where we are expecting a sell from. Now the institutional order structure is bearish. We are expecting bearishness based on the market cycle, based on the accumulation for the monthly contract. The only thing that is left right now is for price action to align for bearishness, and we can now start selling. So for price action, the first thing we want to see is the death of momentum. So we want to see a sign that momentum is dying. Then we want to see a price action for reversal, so we can now get in on our trade. Right now you can see that this Monday Tuesday contract is extremely bullish, which means the momentum is still for the buy side. So we have to wait to see when the momentum will give us a sign that it is no longer strong for the bullish side. So from the price action, we have a higher low right here, a higher high, a higher low, and a higher high. Now we have another higher low right here, and it has created a new higher high. That means the momentum is still strong for the bullish side, and we are looking to take a sell. So we need to still wait until the momentum is giving us a signal that it is no longer strong for the bullish side. So let's continue. Now this is our signal that momentum is no longer strong for the bullish side. Price actually went higher. We got a higher high, but as you can see, the candle that created the higher high could not close above the previous high. That means it is no longer strong and the momentum is dying out. So you can clearly see the rejection, which means the bullishness is dying out. So what is left is for us to see a reversal pattern. From what we have right now, we just got a rejection. That is not a reversal pattern. So we'll continue and see if we can get a break of structure, or we can get an accumulation price action pattern. I have a video on the 5 ultimate reversal patterns that I use, and it covers all the reversals that can happen in the market. I've also created a playlist where I put all the educational videos on the channel. You can go there and watch. I'll leave a link to that playlist at the end of this video. So what we are waiting for now is either an accumulation or a break of structure. So I would also mark the structure point. So this is the current low that we have in the market that we will expect the market to break if we are going to use the common reversal pattern, which is a liquidity run to the upside, a break of structure, then a retracement, and we can take our sell trade from there. So let's continue. Yes, we have that. You can see we got our break of structure, which is a confirmation of the sell. So what is left now is for us to see a retracement back up, maybe to 618 Fibonacci level, and from there we'll take our trade. What I usually do at this point is to go to the 15 minutes time frame to see what the structure looks like, so I can know where to take my entry from. So let's go to the 15 minutes time frame. This is what the 15 minutes chart is looking like. This is the break of structure right here. So I would like to analyze this swing to the downside to see what is happening with the price action, so I can know where my entry will be from. Since we are already seeing a retracement, I'll spread my Fibonacci tool on the chart just to mark the 618 retracement level. This is our 618 retracement level, and around this region is where I want to be getting in on my trade. So from the 15 minutes time frame, you can see a downtrend, but if we check this point, you see a liquidity run right here. So we got a liquidity run here, followed by a break of structure, which means the early sellers will see this as a good setup, and also the retail traders that are only looking at the smaller time frames like the 15 minutes, the 5 minute, and the 1 minute time frame, they will see this as a very good opportunity to take a sell, which means their stop loss will be above this level, and that means we have retail liquidity around this point. I believe you understand what I'm saying. Let me just mark that out. So we have this high right here with a lower low created. That means the downtrend is confirmed, but at this point we got a higher high, which led to a break of structure on the 15 minute time frame. So the retail traders will definitely want to get in on this supply, so they will expect price to get to this supply, and then they will take their sell trade from there, because they can see the pattern that yes, the sell has started and they are joining in. That is why we refer to them as the early sellers. Those are the people that the institutions like to use to complete their positioning. So this will be our liquidity, and since that level is already inside the zone we want to trade, that means this is where we should be looking to take our entry. So anywhere above this level is where your entry should be. I like to place my pending order at that level or at the next micro EBITDA level to the high. The high is 1.1761, and the next micro EBITDA level to that point is 1.17615. So that's where I add my pending sell order. My price is 1.17615. My stop loss was above the H1 high that created the break of structure. I like to use EBITDA numbers and EBITDA price to determine my stop level for protection. This high is 1.1788, which means the next micro EBITDA fence to that high is 1.790, which means the best place to have my stop loss is at 1.1793. And my target is the monthly target. The next minor EBITDA level after the monthly target, which is the previous monthly contract low, was where I put my take profit. And as you can see that our monthly target is 1.1446, which means the next minor EBITDA level to that will be 1.1415, and that's exactly where my take profit was. And this is exactly what the trade looked like. So let's go back to the 1 hour time frame. So this is exactly what the trade looked like. Everything explained exactly how I saw it, exactly what was going through my mind. This is my exact analysis for the sell trade. So let's go ahead and play it to see how it all played out. So price came up, activated the pending sell, and from that point it started dropping until we got to the monthly target right here. And you can see after it touched the monthly target, it went straight to the next EBITDA level. If you don't understand EBITDA numbers or EBITDA pricing, you can check out our previous video on that. All the technical analysis that I use in this video have been taught on this channel. Just go to the playlist. I'll leave a link to that playlist at the end of the video and watch all the videos that are there. That is where I put all the educational videos that I have posted on this channel. You don't need anything outside of that. If you have access to institutional data and you know the price action or the technical analysis concepts that I have taught on this channel, you have nothing else to worry about. All you just need to do is to be present, and when you see the opportunities, you take them. Don't forget to like this video. If you are yet to subscribe to the channel, make sure you hit the subscribe button, and don't forget to turn on your post notification bell so that you don't miss any of our videos when we drop them. I'll see you guys on the next video. Have a great day.